I'm Roger Montgomery from Montgomery Investment Management, and I'm with Brett Craig to talk about the Aura Core Income Fund. Brett, the word inflation, the word recession, there's always something for investors to worry about, and that's right when they're investing their money. Tell me about some of the factors that could impact the Aura Core Income Fund.
Roger, I think as a credit investor, we're always looking at downside risks and how do we actually protect there. I mean, unlike the equity space where you're offering unlimited upside, for us it's about downside protection and provision of a stable capital base and stable income. Some of the things that we're really focused on at the moment, obviously interest rate rises are occurring. Inflation, is exceptionally high, and the RBA is trying to get that under control. And we're looking at the implications that will have on the business environment. What we're really focused on right now is those businesses that have a good moat from a pricing perspective, where they can actually pass on any of those price rises to their end consumer. And we're looking at businesses that have strong balance sheets and strong cash flow so they can still pay back our loan exposure, which is really key.
Brett, investors are always being told to worry about something. It may be that over the long run they only need to worry about 10% of the stuff they're told to. Given that people are worried about interest rates, inflation and potentially a recession, how do these factors affect the way you look at lending?
As a credit investor, we always look at downside protection in our deal structuring. So when we're putting together a deal in any environment, we've always got that downside scenario in our minds when we're putting the deal together. The key thing for us is ensuring that we're funding quality businesses that aren't trying to dig themselves out of a hole, that aren't distressed. So we're trying to fund businesses there that have a strong balance sheet, a strong management team, and are looking for funding for growth and profit initiatives, as opposed to getting themselves out of a hole.
Brett, as a professional investor, I can see that we've moved from an aggressive, bullish environment to a much more cautious and possibly bearish environment. How is that affecting what you're seeing in the credit market?
We're seeing a lot of movement in the credit market, Roger. So when we saw a lot of government stimulus coming through the economy, credit spreads decreased. So we saw the yield you could earn off the assets decreasing significantly. Since that government stimulus has pulled back, we've seen a normalisation of those spreads. As a result, we're seeing significantly increased opportunities coming across our desk, but we are saying no a lot. So that focus on downside protection means we say no to a lot of those opportunities and are exceptionally selective in the ones that we take up.
The Aura High Yield SME Fund has an impressive track record over 5 years of delivering outstanding returns even through the pandemic lockdowns around the world. How do you aim to deliver on the targets that are set for the Aura Core Income Fund?
Roger, it's a very similar strategy from an asset type perspective. However, we are looking at lower risk assets to the high yield SME fund. So we are using the same screening methodologies, the same structuring techniques as the Aura High Yield SME Fund, however applying that to a lower risk asset type and a lower return as a result.
The Aura High Yield SME Fund has an impressive track record of delivering excellent returns of over 9% per annum over the last 5 years, which of course takes into account the pandemic lockdowns. The Core Income Fund has a lower aim in terms of return. How do you aim to have a lower risk in the fund?
Our objective as an investment team will be to have the Aura Core Income Fund sitting senior to the Aura High Yield SME Fund, therefore wearing lower credit and default risk than the SME Fund. And as a result of that lower risk, you do expect a lower return.
Brett, over the last 5 years, the Aura High Yield SME Fund has provided a large number of loans to the agricultural space relative to all of the loans that have been written. And that makes sense because the agricultural sector has been booming. Things are changing now a little bit. What are you seeing?
We still see a lot of opportunity in agriculture. We like the sector. It has provided strong returns, strong security for our investor base to date. We are also seeing a lot of opportunities in the services sector. Some of the sectors that we're a little bit less keen on at the moment are construction. We're seeing some strain running through that sector as we've seen significant cost increases through there. and also the high street retail sector. You know, the bricks and mortar retail sector is something that the RBA is specifically targeting with their rate rises to reduce that discretionary spending.
Indeed, I mean, that's how they're trying to bring down inflation.
Exactly.
Right? Slow down the construction sector, slow down the retail sector. That they're number 2 and 3 in terms of employment in Australia, and that makes perfect sense. Brett, thanks for your time today. Thanks for introducing us to the Aura Core Income Fund.
Thank you for your time, Roger.
Pleasure.